This is Rick Cantville with United Real Estate here in the Queen City office in Charlotte, North Carolina. And I want to reach out to you real quick. I know most of the time when I send you a market update, a real estate market update, it is just in an email form. I wanted to send this video out to you for a couple of reasons. I think it's going to help explain kind of what we're seeing out there in the market right now. But a couple things happened. One was the MLS updated their sales for the year, so we can kind of get an idea of how the year ended. And then also we had a meeting this past week with the National Association of Realtors that actually had a lot of national sales data and what we're seeing with interest rates and things like that. And I wanted to kind of explain some of that stuff to you about what we're seeing. And hopefully, if you guys are looking to make a decision this year as far as buying or selling, it'll help you with that information. So we're going to jump straight into the Charlotte region sales data. And if any of you guys out there want like something a little bit more local, like, a specific county or city, that sales data, reach out to me and I'll be happy to run that for you and email it over there to you. So we're going to jump straight into the Charlotte region sales data. And this is going to show you the comparison from this past December 2023 to the previous year, December, and then also year to date. So from December all the way through December. So as you can see, year to date, the number of new listings kind of dropped down to almost 16%. The pending sales also dropped, not enough new listings out there. So, pending sales kind of follows it. And closed sales also went down almost a little over 17%. So I think what you're seeing on that is the new listings. There's a lot of people that are sitting out there with those fantastic 3% or around 3% mortgage rates on their home loan. And, they may have to sell, or may want to sell for whatever reason, whether they're upsizing or downsizing or relocating or whatever, but they don't want to go from a low interest rate up to, where it was near 8%. It's a big change. And so people right now are just kind of waiting for interest rates to kind of come back down. So if they do have to move, it's a little bit easier to gag down, jumping into something maybe around 5.5 or so. Immediate help, man, the sales price has kind of held up. It hasn't really dropped that much. Went from 380 last year to 377. So not that big of a change. The number of days on market from list to close or days on market until sales really does tell a big story about the number of buyers that are out there and, how fast they're moving on purchasing a new home. So there was a 63% increase during the year on days on market until sale. So just the way the market's going. Average list price has gone up by 6.7%. One thing I do want you guys, because I'm going to come back to this here in just a second, but the month supply of inventory right now at the end of December 2023, we're about 1.7 months of inventory. Now, why that's important, a couple things. One, for a healthy real estate market, it would be great to have like a 4 to 6 month inventory. So right now we're in a kind of a low inventory kind of a situation. And I'm going to come back to that when I talk about interest rates here in just a second. So keep an eye on that, or at least keep that in mind. The next slide here, this is actually from the National Association of Realtors. And as you can see, they're tracking the annual existing home sales. And in 2023, we had an 18% decline in home sales. And a lot of that, again, was because people are kind of tied into that low interest rate loan that they have. And they just didn't want to sell to get into a higher interest rate loan. So not as much inventory, a lot less home sales. It kind of tracked all the way through. Now, as we get into this next slide, is actually very interesting, at least it was to me. This is existing homes versus new construction or new homes on the market. as you can see, inventory of existing homes has really been going down, especially in the last couple of years. But this past year with with the low interest rates, really had a lot to do with it, and people are just kind of sitting on them because they can't sell, sell their house to get out of it. Now, on the contrary, new home sales, the new construction companies, they have been trying to put more inventory back on the market, and you can see where the number of their sales has increased. And new home, a lot of times they do offer some really great incentives, reduction in interest rates, or money back to the buyer, or whatever it may be. So they're trying their best to get the inventory back up. But new home sales, because of the way the interest rate market was in the past, has really been kind of falling off. Now, to talk about the larger than the size of the elephant in the room, I wanted to talk a little bit about interest rates and what they're kind of projected to do. Now, the 10-year Treasury yield has been pivoting down over the past couple months, and right now, maybe around 4%, about four, and that is going to have a lot to do with a couple other things. So, this is the 30-year interest rate or 30-year mortgage versus the Fed fund rate. And usually the 30-year mortgage usually tracks about 1.5 to 2% over the Fed fund rate. And earlier around September, November is actually, they were up around 3. And so they're starting to track back down right now. And they actually do have a little bit more room. And with because the Fed has signaled that they may reduce the lending rate again. So if they do, then interest rates are going to continue down a little bit further. Now, why that's important, it's great for, obviously, new home sales, but for the people that are sitting on those 3% mortgages out there, and maybe they have to move, maybe they have to downsize, or maybe they have upsize or relocate, whatever it may be, usually there's a point where they go, listen, I don't want to get into an 8% loan from a 3%, but maybe a 5.5 may not be so bad. And maybe we could gag that down. So that's kind of that point where they go, okay, let's go ahead and do it. And I think there's a lot of cases out there like that. So, so we're expecting the mortgage, the number of homes for sale to tick up this year because of that, with the reduction in interest rates. The I think you'll see that quite a bit this year. So the last screen I wanted to show you real quick is the home price appreciation since COVID, the arrival back in 2020, and you'd be amazed at everybody in the nation has had quite a bit of home price appreciation. We're here in North Carolina, and it was almost 60%, 15.6. And I'll leave that up there for wherever you may be, take a look at. Now, I wanted to bring that up because if those interest rates do start dropping and you kind of don't know how much equity you have in your home and you want to find out, feel free to give me a call. We can run a home valuation report on your property and get that out there to you, just so you know kind of where your starting point is in the event you want to pull the trigger when interest rates kind of start dropping. The other point that I did want to make as far as interest rates was, now there's a lot of people that are sitting outside the market right now saying, I don't want to buy a home because of the high interest rate. But, home prices are either holding steady or they're continuing to climb. If you're one of those folks that are sitting outside the market waiting for interest rates to fall, you're not the only one. And what's going to happen, and this is the point I wanted to make in regards to the inventory, we're already in a low inventory situation. And if you jump in the market with everybody else when the interest rates fall, instead of buying that $500,000 house, you're now looking at a 550 or maybe even more value on the house, because the home values are going to shoot through the roof if everybody hits the market at the same time. Now, what I would recommend is if you have the ability to do it now, buy the home when, the home prices are kind of steady. Maybe even though it is at a higher interest rate, but you have the ability, if they start falling, you have the ability to refi back out of it when the rates drop, but you're still paying less for the house. But if you wait, I do have a feeling that you're going to pay a lot more for the house, and it's going to cost you a little bit more in the long run, even though the interest rate's going to start dropping. So that's my market update for this month. I'll go ahead and email this out to everybody. If you have any questions about anything you've seen here, if you want to chat with me about the local market or something like that, feel free to give me a call. I'll get that information out there to you. Until then, I hope everybody's having a great day, and we will talk to you guys soon. Thanks.